And we are good to go. So I want to first thank you all for tuning in for this week's episode of Back to the Futures of Me Markets and Mayhem. We're going to be talking about order flow analysis. We're going to be using Bookmap and some of the tools that I built to look at the markets from a couple different perspectives, get a better sense as to what we can expect out of what could be a bit of a volatile trading session today. We do have a few moving pieces underneath the surface for those that are following the larger developments. China seems to be back on the tilt, and they are imposing restrictions on rare earth exports and scrutinizing other trade arrangements in an apparent effort to up the pressure on Trump once again, which, it's not terribly surprising to see that happening right now, given everything that's going on. They want to get leverage. They know they can get it. There's rumors that Trump started to back down from what he was saying based on the stock market's reaction, which kind of gives them an opportunity to lean into it. So that's what we're seeing play into today. We're seeing some volatility kick up overnight and into today's session. So I think that's going to be one of the defining factors. We've got a lot of headline risks going into today and likely the rest of this week. And I mean both upside and downside risks, or what you like to call left and right tails. So let's dive into it. First, got to talk a little bit about risk. That's a big part of trading and investing. And the one thing that I like to drive home is don't risk more than you're willing to lose. For me, what keeps me in the game, but not nervous about my positions, is not putting more than 1 to 2% of my total portfolio liquidity at risk in a single trade. Now, you might say, does that mean you're only taking positions that are 1 to 2% of your total portfolio size? No. It means that's how I'm managing my stops on them. And I'm looking at position sizing based on how wide of a stop I have to use. So, what does that tell you? It tells you that I'm sizing positions based on what I expect their volatility to be. And I do that by measuring realized volatility and implied volatility. So, this is something you can consider if you want to try to optimize a more systematic approach to how you look at the markets. This is something that I've been doing. I started off a much more discretionary trader, kind of flying by the seat of my pants, just really looking at charts. Then I started to learn more about taking a bigger view on the moving parts behind the surface, a sort of macro view for the very long-term trends, but also focusing more on momentum and systematizing my trades, because one of the things I noticed when I was looking at my trade journal was the trades that were more discretionary in nature were much more of a gamble. But the trades where I started using a more systematic approach to define my entries and my exits and my risk, they started to produce higher levels of consistency. Now, this might not be true for every single trader, and that's totally fine. Lean into what works for you. The reason I mention this, however, is that with trading having about a 90% failure rate, the biggest thing that I see in folks that I coach and members of Traderade that hurts them is leaning more into the emotion. So if you're leaning into the emotion of trading, my recommendation sincerely is to become a more systematic trader if that emotion is hurting you. I think for a lot of people out there that are trading this market and trying to figure out, why am I getting beaten up on days like Friday so badly? The other part is you've got to learn about position sizing. It's so important not to put more capital at risk than you're willing to lose. And then for folks that are using leverage, I mean, I've seen crypto firms that offer 200 times leverage. Can you imagine that? That means if a position goes 0.5% against you, you're done. Your portfolio in that firm is wiped out if you're using that max leverage. That's not a way to play if you're, I mean, basically that's just pure gambling. I think it makes a lot more sense, especially for newer traders, to start small, become more consistent. And as you get more confident and more consistent and your system works, then you can start putting more capital to work. And then you can be more confident that you're managing that risk because you're sizing those positions based on their volatility. If you put those practices into work, you'll find your trading will improve. And the biggest thing is you've got to be accountable to yourself. So journal those trades, every single one of them. Why are you entering? At what price? How many times are you taking entries? Are you scaling in or going in all at once? Do you think you're smarter than the market? A lot of people that think they're smarter than the market get hurt. How are you getting out of that trade? Are you getting stopped out? Are you taking profit? Are you scaling out? These are all really important things. And what's your mindset throughout the trading process? Journal this all. It can be something as simple as a document, a spreadsheet. You can get more fancy. There's apps for it. But at the end of the day, if you start taking a more systematic approach, you size your positions based on the amount of risk you're able to tolerate and their volatility, and you journal your trades. That's the trifecta to becoming a more consistent trader. The reason I mention this is because this market up until maybe Friday has been very easy for, basically since April. There hasn't been much fall. It's just been up, up and away. Every micro dip has been bought. Those aren't necessarily normal trading conditions. We still may enjoy them moving forward to some degree, but I think it's really important to become more disciplined so that when trading conditions change, we're able to adapt to them. Now let's talk about our weekly pivots here, and I'm going to put these out on social media as well, so you can check them on my X or Twitter feed, whatever we're calling it these days. And I'll show you exactly how I created these weekly pivots in just a moment. What I'm doing is I'm analyzing a number of variables: price action, volume, and other market dynamics. And I create these charts. These are created in real time on the Traderade Discord, and they map out these key major pivot levels, which often end up being inflection points for the broader market. And the reason that we're sharing them like this is because I want to try to add some value for your own risk management. I know a lot of folks out there spend a lot of time just drawing lines on charts for their own market prep, and that's fine. But what if you can automate some of that and save some time? And that's always been in the back of my mind, by the way, a big part of how I manage my time, through intelligent automation wherever possible, where it can produce the same or better quality results as manually doing the work. These pivots are an example of that. And that's where we drew this week's pivot from. You can see this low. This was made on Friday, and then we had a nice bounce into Globex last night. Now we're retracing some of that today from yesterday's session. But you can see that 6568.50 pivot. That is a level that I've carved out that I find to be a major area of support. If we're pushing below it and we build acceptance below it, I'm looking for more opportunities to fade this market because it's going to look more like an interim top. And I'd probably look for opportunities down to about 6441.25 where there's some confluence with the Ichimoku cloud. On the other side, we've got the NASDAQ, similar set of pivots. Friday, we got right down to my 24,185.25 pivot. This is an area that I also want to see held if I'm going to remain bullish. If indeed we break below it and build some acceptance, I would be looking for fades back to this lower pivot around 23,112.75. And if we're able to hold above it, I think the next level of resistance is logically 24,969.75. Just like with ES, it's 6743.75. So these are major pivot levels. I like to use them for swing trades, but given how dynamic this market is, it makes sense to also look at them as significant support and resistance intraday. You can see on Friday, we traced through that whole set of pivots, similar with the NASDAQ. So these are areas where I would expect there to be a reflexive reaction We could see yesterday we rejected right at that higher NASDAQ pivot. Overnight, a bit more of the same. So we could tell the market is looking at this market generated information in a similar way. It is indeed actionable. Now let's take a moment just to share some cool deals, and we're about to dive right into Bookmap. If you want to get up to 40% off of Bookmap, visit traderade.com/bookmap. That's traderade.com/bookmap. Scroll down to the special offers and lock in your first billing period at up to 40% off. It's a pretty solid deal. All right, let's dive in to Bookmap here. And I want to share a preview of something that is going to be coming out pretty soon. And I'll get back to it during live trading hours. But this is the options viz. And we're going to be able to put it on any stock that has options on CBOE. So you guys have probably seen the options viz on S&P futures or SPY or NASDAQ. Now we're going to be able to put it on any stock or ETF that has options. And I'm going to build a really solid package of the most popular optionable instruments that one could subscribe to for Bookmap or MotiveWave to be able to visualize this data. So exciting things are in the works. Stay tuned. We'll demonstrate some of that during today's session, but I just want to show you, this is some of the data we collected from yesterday's session. You could see the most active call strike around 180, the second most active call strike at 185, a really large level of call positioning, which can be resistance up here at key 1 plus. You can see there was a large amount of offered liquidity around there. So we'll revisit this during the trading session, and I'll probably do some live streams just over the next several weeks, both with this Back to the Future stream that I do and some others for Traderade to demonstrate these tools during regular trading hours, because I think there's some really cool stuff that we can use these for to get a better edge when we're trading these stocks or just trying to get better entries and exits in them. Now let's take a look at the S&P futures overnight. And we could see that we had a kind of nasty decline in that trend structure is one of a downtrend so far. Starting to consolidate those losses here, but you could see in the overnight session, just lower highs and lower lows. So from a very, very simple trend following perspective on a small time frame, we're coming into the pre-market with a bit of a downtrend, a bit of a corrective impulse overnight as we had headlines out of China that were not super encouraging on the trade front. Now, I think a fair amount of this is saber rattling. That would be what I would expect, because China does want to solidify their position in this trade situation. So they're going to say things, they're going to push, they're going to try to make Trump buckle. Trump's going to do the same to them. It's sort of this back and forth that we get. Why does it matter to us as traders? Because it adds to the vol. So it's a really good idea right now to have some real-time news. We have streams of real-time squawk on our Discord, so we're constantly tuning into that. We also have the headlines on there. So when these things pass, we're able to tune in and take a look and see if it's something that matters and if we should adjust our perspective. And I also watch these headlines as I'm live streaming, because quite frankly, this can shift the entire tone of the market. You get one big headline out of China or Trump right now, and we could be ripping up 3% or dropping 3%. We're kind of back to that environment where we're walking on eggshells because there are some high stakes. We also see EU increasing its scrutiny of China and some of the regulations that they might put on China. We saw, I think it was in Denmark, there was a company that was basically seized, a Chinese company that's being taken over by the Europeans. And then we saw this morning another headline coming out. The EU considers forced tech transfers for new Chinese investments, with the EU also considering enforcing joint ventures. Now, does that sound familiar? It should, because that's the sort of thing China does to Western companies. Getting some headlines out of the White House as well. We will continue layoffs and ride out the shutdown. So there's really no progress being made on the shutdown. The House is still out. Probably not going to see much until later this month on that front. This has not been a big volatility catalyst for the markets, though. If anything, the shutdown has reduced the amount of data that is being released and added big delays to it. Like CPI is not even coming out for another 2 weeks, and that's going to be the September CPI. So take that into consideration that in some ways the shutdown's dampening vol because there's less data, so there's less volatility catalyst. That's the strange world we're in right now. But going back to the S&P overnight, it does look like we're consolidating some of those losses ahead of the open. We can also see there's a passive buyer starting to nibble down here, 572, and that's an iceberg buy. You can see that popping up on the sub chart here. So perhaps we stabilize. I would like to see us pushing above this put wall into the open. You can see we're also very close to reaching back into positive gamma territory. In fact, yesterday we did close in positive gamma territory. And then overnight we slipped back into negative to slightly neutral. Now, for those that don't understand why that matters, let's have a quick primer. Negative gamma tends to lead to more of a chase dynamic. That means you have more potential for dealers to sell dips and buy rips. It's a bit of a vol catalyst. Positive gamma is the opposite of that. In positive gamma territory, you have dealers that are more likely to sell rips and buy dips, which compresses volatility. So this is the paradigm that we have to look at depending on how we resolve. And if we're real close to that flip level, and we're not too far from it now, the closer we get, the more it's like neutral gamma. And what I mean by that is less impact on how dealers interact with the market. And we are just about 10 minutes away from the start of trading. Let's take a look at the calendar for today. There was an IMF press conference. Now we're heading towards Goldman Sachs's earnings call as we kick up earnings season for the third quarter here. We've got the ECB's Donnery speaking at 9:45. Wells Fargo has their earning call at 10 a.m. 10:15, we've got the IMF Global Financial Stability Report, which could actually be a slight vol catalyst. 11 a.m., Citigroup's earnings call. A bunch of speakers from central banks, but Fed's Powell speaking at 12:20 p.m. So, bit of a jam-packed day compared to what we've been used to. The earnings calls and some of these IMF and central bank speak, that can add to the headlines as well. And again, we're kind of on lookout for headlines from the White House, from China, about where we are with this trade situation. I remain steadfast in my belief that we're going to have some kind of de-escalation by or before November 1st, because I don't think either country really wants things to go off the rails and create a lot of economic pressure. For China, their exports have been a real bright spot for their economy. And for the US, imposing 100% tariffs on Chinese imports is really problematic if we haven't replaced that manufacturing capacity with other trade partners or internally, and we really haven't. Now let's take a look at the NASDAQ futures overnight, likely a very similar look, maybe a little bit more dramatic. It didn't have as much pauses for those sort of head fakes higher. NASDAQ just kind of ground straight down, losing about 500 points on the overnight session. It does have a similar look to the S&P, however, recently we're starting to see it consolidate. It hasn't made a new low. Maybe you could argue this as a higher low. We'll see where we go from the open, which is just about 6 minutes away. But overall, I think this is going to be a day where we have a decent amount of volatility and a lot more headline risk. So I'm going to be watching the headlines very closely during this stream. And if you're day trading this market, scalp trading this market, I highly, highly recommend watching the headlines more closely during periods like this where things are just more likely to be volatile. And we'll share one other chart. We're going to talk about this one. This is my dynamic pivots chart. It's got the SPX options visualizer levels as well as some of these pivots. And we can see the 6606.75 pivot is doing a pretty good job as support this morning. We really don't want to see that level break. And I think we could talk about this pivot up here, which is around 6641, being a level to watch intraday to be bullish above and bearish below. That's pretty much right with the put wall. So we're going to watch that level on Bookmap as our level to get a sense as to whether or not it makes sense to take longs. Obviously, I do want to see some of the opening range and some of the initial flows to give us a better sense as to what other market participants are feeding us in terms of data, transactional data, which is really important for shaping my view. But overall, just looking at the way things have traded overnight, we can see this is a line in the sand. So let's talk about it as 6641.50 that we want to see the S&P be able to break above and build some acceptance above. If we take a look at the NASDAQ here, we've got a very similar level. That's 24,660.75. Again, overhead resistance in the pre-market session. I'd love to see us break above that and the vol trigger. So we're going to look at the vol trigger in Bookmap as a similar level as this pivot when we're watching the market trade. So you can see that right up here for the NASDAQ and right up here for the S&P. That's kind of a nice line in the sand, and you can see there is some confluence here between the put wall, the contracts on offer, and that pivot. And seeing just a bit of pressure as we get closer to the market open here. Let's take a quick look around the rest of the futures complex. Just really quick here, we'll pop up this chart from FinViz. And pressure all over the place. Look at energy just absolutely getting crushed. We've been talking about this for a while, that it did look like energy was going to be just continuing to make new lows. I was looking for the mid 50s as a place where West Texas Intermediate crude might base. And we're just continuing to grind lower here. If you look at this chart on a weekly, you can really see how clearly defined this is as a downtrend too. We really never recovered from the 2022 highs. That was pretty much it. And then we just started to form a downtrend of lower highs and lower lows. So I expect a new low to continue to confirm that trend. And I know a lot of folks are watching gold right now. Gold could be due for a little bit of a cool off, which wouldn't be a bad thing at all. I don't like seeing things like this go kind of parabolic as it is. So I'd much rather see it pull back to say, at least the 50-day moving average, maybe consolidate a bit. But, gold and silver have been extremely strong here. And I think a big reason for that has to do with the fact that there's increasing uncertainty. The debasement trade's very much alive and well, with the Fed pivoting towards easing and fiscal policy being expansionary with a really large deficit. Those things are all good for gold and silver, as is just economic uncertainty as a whole. Let's take a quick look at gold and silver from the overnight session here. So a lot of excitement overnight in gold. Remember, it loves that uncertainty. So you see that that headline risk coming back in. Gold gets a bid, but coming into this morning, you're starting to see it come down a bit again. And these things are a bit extended, so I would expect the trading to be a little bit more choppy. I think some of the near-term easy gains in these have been realized, and the next catalyst is likely to have to be headline-driven to drive it too much further from here if we don't get a period of consolidation first. Remember, for anything you're trading, you want consolidations and corrections in a broader uptrend. That's what helps to make it more healthy. It helps to improve the quality of the market structure. So there's more levels of support to go back to. This is something that we should all really want. Yes, it slows the pace at which we might make money on some of our trades, but it makes those trades more sustainable for a longer duration, ultimately potentially unlocking larger gains. Especially true for gold and silver. Silver overnight session, kind of a similar look as gold as well. It had this pop. Now we're dropping a bit ahead of the US market open, which is just less than a minute away. So we're going to shift over to the S&P 500 futures for the US market open, talk a little bit about what we see there. And markets are open. Just going to zoom in a little bit more on this open. Seeing some pressure here. Not a lot of transactional volume on the sell side though for this pressure. It's really just buyers not participating yet. So not too concerned of yet. And selling pressure increasing modestly here to some of the delta sell levels we saw just about an hour ago. We are seeing some pressure increasing in the price action as well. Again, a lot of this is buyers really not buying more than sellers leaning on the sell button. Starting to see some buyers come back in, finally showing themselves, hey, we exist, guys. Check us out. We could push price around too. But kind of an uneventful open so far. I'm going to take a question real quick as we watch this process. So Marge asks, can you explain how to apply gamma levels? And so I want to talk a little bit about what we see on screen here. Each level is a little bit different. So I wouldn't say that we can treat them all the same. For example, a put wall is often a large area of put implied support. So I would expect it to be support. If we break below it, you usually get a decent continuation like we saw in the overnight session. So that's one level. Similar with a call wall would be a decent amount of resistance. And if we are able to break above it, you should see some decent continuation. So that's an example of walls. Gamma 1 is a really large level of exposure on both sides of the chain, calls and puts. That type of a level tends to be more magnetic. You can get drawn into it and chop about a bit, especially when there's a lot of flow there, like yesterday with the hot put. We certainly saw Gamma 1, pardon me, as a level that we saw a lot of interaction with. And then these key negative levels, these are levels of put exposure. So we're leaning a little more heavy on the puts, and these levels, they tend to be areas of potential support. Not quite as strong as the put wall, but still noteworthy. And if we crush them, you usually get some continuation. Then we have the gamma flip level here, right at VWAP, as it turns out. So that's an interesting confluence. That's the level where we switch between positive and gamma, a positive and negative gamma, and around that level, let's say 10 points above and below, we're basically in neutral gamma. So that's a quick primer. There's more at traderade.com/SPX. That's traderade.com/SPX. You can learn more about how this all works if you're interested. And then Marge also asks, how to identify pivots. I have an algorithm that generates them programmatically based on volume, price action, and some other variables. And then those are streamed out to members so they can make informed decisions both on an intraday time frame and a longer time frame. So to take a look at those pivots, we got this on screen right now with the NASDAQ dropping a bit here. Here's the 24560.25 pivot. We looked at this a little earlier. This is an area where we've seen some support. I certainly wouldn't want to see the market crush this pivot and build acceptance below it, or it'd make me inclined to believe we've got some more room lower. Similar, we can see this delta volume bar. This isn't just an aggregate of volume. This is delta volume. Sell volume is really picking up here. So now sellers are actually starting to make themselves known. Let's take a look at that on the S&P chart as well, and you can see similar. We're getting below the 6625.25 pivot into key 5 negative, and we are seeing delta sell at the highest we can see on this chart so far. So sellers now really starting to show themselves. We'll just zoom out a little bit on this chart to a 20-minute time frame to be able to better show that as well. So you can see the market pushing to new lows, and you can see some of that sell volume, the delta side of it, with these larger, more aggressive bubbles starting to pick up. So at this point, we've rejected that bullish above and bearish below pivot that we talked about. That was the, we talked about that being pretty much confluent with the put wall on the NASDAQ and the vol trigger on, the put wall on the S&P and the vol trigger on the NASDAQ. So we can see that that rejection kind of puts us into more of a bearish stance. And we're actually getting a really good opening range today. I got to say, of everything that's going on, that's exciting me the most. We are just 5 minutes into the trading session. We've got almost a 20 handle opening range. There you go. 20 handle opening range already. That's exciting. That tells me we could be shaping up for a more dynamic trading day. We'd had opening ranges of 10, 12 handles for, weeks and weeks and even at months at a time. And then, of course, Friday was a little bit more dynamic. Monday was a little bit more dynamic. And now we're seeing that dynamism continue. Something I talked about a little bit on my note on Monday morning, that we could have a more dynamic market this week just because we've seen some expansion of volatility. We've seen some expansion of range, and usually that continues to drive more dynamic price action. And certainly that is the case so far this morning. And sellers leaning into that structure. We talked about the overnight structure of being a downtrend, right? Lower highs, lower lows. We are pretty darn close to making a new lower low as we enter the US auction. You could see that downtrend structure continued from the Asian auction into the European auction, and now apparently into the US auction as well. Okay, I've got another question from my friend Loki. Good morning, Mayhem. Good morning, Loki. It's my first time ever experiencing government shutdown, so I want to know what the hell Powell is going to say with no data. Yeah, that's a great question. Few things. I think it gives him more reasons to pause, because at this point, he doesn't have the data to be able to make an informed decision. So he could have more reasons to be reluctant to continue the path of cutting. That would be the biggest thing. He's always said he's very data driven. And I just want to take a quick note to say we are getting close to that bottom pivot we talked about earlier. So let me just pull this up on screen. We talked about 6606.75 as the lower pivot. That was the lows in the overnight session. We're getting right back down there with some pretty aggressive sell side volume. So it went from buyers being on strike to now sellers really being in control. Remember, there was an escalation overnight. China saying that they're really not going to back down on this. So they're really trying to amp up some pressure. They know that one way they can exert that pressure is to bring U.S. markets down. That tends to get Trump back to the negotiating table. So here we are. Let's watch this 6606.75 pivot. Really got to hold that. We might then consolidate and chop in this range a little more. But if we do break below it, I think we'll get some decent continuation to the downside. So that being said, low key, I don't think there's going to be too much of a difference in the Fed's path, but they could pause for a meeting or two without the data, and they could blame the government shutdown for it. It's a very convenient reason not to cut, right? I mean, if I was them, I wouldn't want to cut without having the information that I need to justify the cut. So if I was in his seat, I'd say, we're going to wait for the government to reopen so that we can make a more informed decision, because right now there's too much uncertainty without that data in front of us. Now, whether or not that's the real reason they pause, that's a whole other matter altogether. Look down here, just right by our pivot level, we've got a 1,000 lot bid on the SPOOs or the S&P 500 futures. It's rejecting that bid. That is what you want to see. That's giving you a sense that sellers don't have the supply to take us through that 1,000 lot bid, at least yet. That was right down there at our pivot level as well. So that confluence means that level is more important to the market. So we can see that level down here. We can see the bid. That, again, gives you a sense as to how important that level is to the market right now. So if we do crush below it, I would get a little bit more concerned about that downside continuation. On that last impulse upward, we had 61 short contracts stopped out. So that was just enough, just that 12 points off the lows was enough to get them out of that. And buyers are starting to show a little bit more aggression here. And what an opening range. My goodness, this is what, a 30 handle opening range in the first 10 minutes of trading? This could be a pretty interesting day. And that bid just vanished. That 1,000 bid, gone. And gone. Didn't move, just left. Did it have the desired impact? Was the goal to scare the sellers away for that moment to get that stop run? I guess we'd have to be at the trading desks to know. But at the very least, it did at least create a pause in the downward pressure. And folks, if you have questions, feel free to ask them. Whether you're on YouTube, Twitter, Substack, Kick, Twitch, Discord, feel free to ask those questions and I'll get to them as soon as I can. Got a question from Steve. Steve asks, how much do you use Bookmap's iceberg tracker for your trading decisions? And good morning. Well, good morning to you, Steve. Thanks for tuning in. I use it quite a bit on days like Friday and yesterday. Passive buyers and sellers were making such a big impact on the price action. Usually options have a bigger sway, but there are days where those passive buyers and sellers really move the market a lot more. It's typically days that are more dynamic. And so it really depends on market conditions, but I have my icebergs tuned up so that I'm also only really looking for the ones that are higher standard deviation. And I can show you guys how I do that in a moment if you're interested. Just a follow-up question. So I would say I use them quite a bit when the environment is conducive to them. I like to really focus on what's moving the market. And when those passive buyers and sellers are having an outsized impact, it behooves us as traders to watch that flow really closely. One of the things I like about Bookmap and the MBO data package that unlocks this functionality is being able to know with certainty that that's the type of order flow you're seeing, that these are actual icebergs. We're not just inferring naively. And what I mean is if you look at volume profile, you might say, well, that looks like an iceberg, but you're not really going to know unless you have the order flow. And Bookmap with that MBO data package unlocks that order flow, and then you can tune it up to be able to really only see the ones that could be more market moving. So that's just a bit of insight. I really find them valuable. That and the stops as well. Setting them to high standard deviation stop runs tends to be pretty helpful. Like you can see this little stop run up here marked the top of that little impulse move. And let's see. Got a question. How do I turn on seeing those big lots? If you're talking about the icebergs and stops, you're going to have the MBO data package from Bookmap. And then you download the icebergs and stops plugin, and we have a pretty big sell coming in here. Little bit of exhaustion. There was about 280 long contracts stopped out. We're making a new low on the session here. And that did crush right through a bid of 529. So I would say sellers thoroughly in control here. We're now making new session lows lower than what we saw during that overnight session as well. And we're crushing below that confluent level that we had talked about where the bid once was, but we had also looked at the pivot down here, and we've broken right below that pivot, and now it looks like we could be heading towards key 3 negative at 6591.50. Let's take a look at the NASDAQ as well. NASDAQ also making a new somewhat exhaustive low. This is the Traderade exhaustion signal. You can see those circles stacked vertically. It's a medium confidence indicator of mild seller exhaustion here on both the S&P and the NASDAQ. Typically, that just leads to some degree of consolidation. If it's a higher confidence exhaustion print, you could see a reversal off of it. But this is pretty mild overall, and sellers are certainly showing that they're willing to continue pushing. And folks, if you're enjoying the stream, feel free to give it a like, share it out with your friends. If you're on X, there's an easy button to reshare the stream with other people. Pinnacle asks, is this a bullish setup? No, so far, this is the opposite of a bullish setup. You're breaking the overnight lows. You've got pretty aggressive selling coming in. We're just waiting for the options flow to start printing here. But overall, there's not a lot here that tells me that we're going to see a reversal near term. You just have more and more buy-side stops being pushed out here. This is another stop run of 200 lots as we make this new low. And you can see the NASDAQ following along, also making new lows at a similar cadence. And the overall heat map here is pretty nasty. I'm just going to pop this on screen so you can see it. But the market heat map, lots of pressure, especially in the higher beta groups. Tech's under pressure. You've got some of these financials under pressure. Some of their earnings are coming out. Goldman, their earnings call started. They're down over 5%. Robinhood down over 5%. JP Morgan down over 4%. So overall, it's a more defensive look today as we have a reversal of what was going on with the trade tensions overnight. They're re-escalating. So now there's also a bid for the more defensive stocks, the Walmarts, the utilities, some of the healthcare. So this is overall kind of a bearish look in what we're seeing so far. There isn't a failed breakdown. This is a breakdown. We broke right below those overnight lows. And we see continuation. So this is the NASDAQ chart, and this is the breakdown right here. So the only way this would turn into a failed breakdown, it would basically, you'd have to pop right back up, almost like a beach ball underwater to say 24,550, build some acceptance up there and make this look like it was just a fake out. But so far, we're not seeing that in the price action. And I'm just responding to a question from RK on Substack. We're starting to see some of the flow come in here. And on the S&P 500 options chain, seeing more demand for calls and puts so far. We're going to keep an eye on this. It's very early yet. NASDAQ has a somewhat similar look to it as well. Flows are bullish overall. And we're just getting a lot of market data coming through, some cross currents and zooming in and out. So obviously adding to that load. Let's also take a look at the SPY here, see what folks like us, retail traders, are doing. SPY's got a bit of the opposite look to it. Put flow is pretty heavy on the SPY. Hot put, warm put, about 10,000 versus warm call, hot call, 5,000. And to break that down, those are just the two most active strikes on the chain on either side. So the hot put's the most active put, the hot call is the most active call, warm call is the second most active call, warm put's the second most active put. So you can see on SPY, it looks like more hedging flows here. Take a look at triple Q. Triple Q is looking a little more bullish. Overall, looks like triple Q's got more flows and calls than puts. We also got the Russell 2000 small caps, also looking more bullish. So really SPY is our center of worry so far. Although I will say SPX also taking on a similar look as SPY. Now we've got 8,000 on the top two put strikes versus 3,000 on the top two call strikes for SPX with a put call ratio on volume of 1.18. That means 18% more puts trading than calls. So it is a little heavy. Now that is kicking up even more, 12,000 on the top two put strikes versus about 4,000 on the top two calls. So it's looking a little heavy here based on the options flow. And it looks like we've got about a 40 handle opening range. Boy, it has been a long time since I've seen an opening range that big. So overall, based on the options flow, it is looking a little heavy so far. There's a lot of put demand this morning. The good news with that is if you have a whole lot of people hedging and we get a positive headline, all those hedges get taken off and it's very liquidity positive. But we still need that positive headline. We need at least the idea of progress. A headline from the IMF's chief economist: China still has a lot of non-performing loans, I should say, in the housing sector. And domestic demand has been weak for some time due to the property bust. The reason that matters in context is China can't just flip a switch and go to domestic demand and not care about exports. So they have to figure out the export situation with the US. It would not be good for their economy to lose that much business that quickly. Just like the US economy would not do well with 100% tariffs on China and restrictions on rare earths. So there's just a lot of room for reconciliation here. So we're looking for headlines that give us some sense of optimism about that. While I say all this, we are still seeing the flows really build into the put side. 4,000 across the top two call strikes, 32,000 across the top two put strikes. That's quite a lot. Now, again, I do want to see price above 6625.25. I think that's an area to watch. I think if we can break above that in the BGL confluence area, then we could get a nice pop back to the top of the range, perhaps around 6641.50, where Q1 negative is. But I expect this to be a volatile and dynamic trading session for the Nasdaq and the S&P, given the size of the opening range and the amount of volume coming into options, particularly on the put side so far. Seeing a bit of a stop run here, 203 buy side stop. So those are shorts getting stopped out on that run. And we're just seeing some resistance here around key 5 negative. But really, what has my attention right now is the amount of early session put demand. That is unusual. I believe a lot of those flows are related to hedging, not necessarily directional bets, but it's still noteworthy. Wells Fargo's earnings call is coming up in about 5 minutes. Might catch some headlines from that. And you can see liquidity thinning out on the order book a bit here as well. Speaking of which, I do want to show that outside liquidity. For some reason, it doesn't always auto-enable, but here we go. Just about 25,000 contract order book depth on the S&P, which is the sort of new normal. I remember the days where it was 50 or 60,000 on average. It was a more liquid market. And we are just starting to push above the 6626.25 pivot and BGL. And I will say my overall outlook for what all is happening is that it will be resolved. Talking about this a little bit earlier, but I think the bigger risk in the headlines is upside at this point, because I don't believe China or the US really want to damage their economies or the global economy. I think both countries are looking for some kind of reconciliation, and they're using this more aggressive approach to get there, which is, threats that they hope they don't have to fulfill because they would hurt their own countries in ways that wouldn't be pleasant economically. So I think the market's also looking at that a little bit here as we try to reprice what these headlines could mean. That looking around the corner, the other side of this is, we can't kind of be in this constant trade flux. There's going to be some kind of agreement. It's likely to be a lot lower than 100% tariffs on Chinese goods, and we're likely to see the flow of rare earths normalize to some degree. But this also presents an opportunity for the United States and our allies to invest in our own diversified rare earth supply chains that don't rely on China, and to do the same with manufacturing, especially of anything else that is critical, so that in the future, this type of negotiating leverage does not exist. That would be what we need to do as soon as we can. So let's go back to the beginning of this session. We're just getting back close towards the top of the opening range. If we can break above that opening range and build some acceptance, that would be a pretty constructive look for a continuation higher. I'd really, however, like to see the options flow improve to favor the call strikes more. So far, it's 36,000 on the most active puts versus 7,000 on the most active calls, which is not terribly inspiring of confidence. That put flow, the reason that we watch it is because if you imagine, if you're a market dealer, you're selling options. When you sell those 36,000 puts, you have to hedge your delta, which means you have to short S&P futures. In doing so, you're taking some liquidity out of the market, and that can have a drag effect. So one of the reasons we like to watch these options flows is the second order effects they can have, because there is some degree of leverage that these participants enjoy pushing that much volume so quickly. It can certainly have an impact on price action, although sometimes that impact is a bit delayed. And let's revisit our pivots. We're starting to build acceptance above BGL in 66.25, 26.25. So we probably got a bit of room higher up to this major level resistance, key one. This has been the resistance during the whole overnight session, pre-market session. Breaking above that would be a really constructive look, because it would also take us above the top of this opening range. So there's that confluence area once again. And for me, the way I like to trade, driven by data, I like confluence a lot. To me, it adds validity to the level for me, but also for the market. You can see the market's generating information from multiple different areas, giving you a sense of the importance of that level as well. Let's take a quick look at gold here. Gold catching a solid bid recently here. Had a bit of a rough overnight session. We talked about it, had this bid, it came back down. Now it's starting to get closer to those overnight session highs. We saw sellers pull down the point of control. Buyers are handily pushing above that. Gold's starting to look like it has some juice again here. Similar looking silver. Looking like it's basing, putting in a low, and ready to make a charge above 50 again. And then we have our high beta friend Bitcoin, which is also starting to look more constructive during this session. But gold and silver looking better overall than our digital friend Bitcoin in this session. The way that gold and silver are trading looks like they want to continue making their push. Extended or not, all the catalysts remain present. So I want to thank everyone for tuning in. If you'd like to learn more about my work, visit Traderade.com. If you'd like to get up to 40% off of Bookmap, visit Traderade.com/bookmap. And if you'd like to check out this SPX options visualizer, visit Traderade.com/SPX. And stay tuned. We're going to have a much more exciting options visualizer package coming soon with all the major indexes, ETFs, and some of the most popular optionable stocks all in one package for Bookmap and MotiveWave. Catch me next week, Tuesday at 9 a.m. Eastern, for the next episode of Back to the Futures with me, Markets and Mayhem, and wishing you all an awesome green week ahead.